So some of the best opportunities in real estate are found in commercial real estate. And syndications provide a way to access those even with limited real estate experience. And they have typically high returns by industry standard. As we saw, they have low volatility, tax benefits. They provide passive income. They have built-in liability protection. So as a passive investor, you are not exposed to liability because you are not actually doing anything. Whereas if as a single family home owner, you are exposed to liability issues. Anybody can sue you if something is. So this is a big advantage investing passively, especially for new investors. Easy to diversify. I mean, you don't have to pay the full acquisition cost. As a passive investor, it's not your job to arrange the money for the whole project. You can choose whatever amount you want to invest after a certain minimum threshold. And actually, it's a good idea to spread your capital across multiple projects, across multiple sponsors in order to minimize your risk. And another big advantage of investing in multifamily syndications is that they are really good inflation hedge. Cons of investing in multifamily syndications passively. Biggest con is that these are illiquid investments and period is sufficiently long. The investment period is like 5-6 years typically. So before investing, you need to think about that and make sure that you will not miss that money during that period of time. Only qualified investors are allowed to invest. As we saw earlier, accredited, or you have to be accredited investor or sophisticated investor in order to be able to invest. High investment threshold. Typically, there's a higher investment threshold as compared to stocks or REIT, as we saw earlier. Typically, minimum investment amount is $50,000, but there are sometimes lower, like $25,000, but more often than not, you will see like minimum amount $50,000. You have no control. Performance highly dependent on sponsor. Sponsor can make or break a deal, irrespective of how good or bad it looks. An experienced, good sponsor is very crucial for the success of the project. Change in market conditions. So market can change anytime and things can change drastically. This not only applies to multifamily syndications, this applies to pretty much any investment, be it stocks or real estate or even savings. So that's always a risk. Capital call. If anything changes in the project and project starts failing, you might get a capital call. Capital call means that sponsors decides that in order to keep the project going, they will need more money and they reach out to investors. And if you want to keep your original share in the project, you need to provide more capital in the same ratio. And if you don't, your share in the equity will go down. So that is always a theoretical possibility. It doesn't always happen. But yeah, you should consider that. More complex taxes. This is usually not an issue if you get taxes done by a CPA, but if you do taxes yourself, you have to know that you will get a K1 partnership K1 during the tax season, and it can be daunting for someone who's not well versed with tax codes, or if you're not very comfortable with that stuff.